Hey guys, I'm the founder and CEO of TruStory. We're building an app to debate ideas. At TruStory, we have a passionate community of nerds who love to debate. The goal of this debate is not to yell or tell you who's right or wrong. It's really to hear all sides of the argument and seek the underlying truths that we want to believe in. Sometimes we find that we agree on stuff. Sometimes we find that we just have different philosophies. Either way, we walk away much more informed because we hear both sides. And so anyone can post a claim in the app, and then community members who agree with that claim back it with an argument, and community members who disagree with the claim challenge it with an argument. Over time, we curate the best backing and challenge arguments on either side, and at the end, you get to kind of see where the community lies on this topic. Are most people backing it? Are most people challenging it? And most importantly, why? You kind of walk away with the nuanced viewpoints. So the claim I picked for today in this summary debate that I'm trying out is a debate that we actually had a long time ago. It was about a month ago that we had this in the app. This one said, there's no uniquely successful strategy for investing in crypto, buy Bitcoin, and wait. That's it. It got a decent amount of engagement, so I thought it would be an interesting one to summarize and kind of share some of the arguments that came in. And there's a lot of nuanced viewpoints and things I learned from reading the arguments, so I just wanted to share that and see what you think. And so, again, the claim is that there's no successful strategy for investing in crypto besides buying in Bitcoin and holding it. And I'll go through some of the arguments that came in, and I'll start off with one by a community member called Matrix Decoder, where he says, I agree with this claim over a long enough time horizon. He calls this thing, he brings up this thing called passive investment strategy, where the idea is that the definition of a passive investment strategy is that to maximize returns by minimizing buying and selling. So index investing is one common passive investment strategy whereby investors purchase a representative benchmark, such as the S&P 500 index, and hold it for a long enough time horizon. So he argues that the buy and hold strategy might work for most people because to some extent it's difficult to beat the markets. And there's also this concept of efficient market hypothesis, which he brings up. And efficient market hypothesis means that it's an investment theory whereby share prices reflect all information and consistent alpha generation is impossible. Theoretically, neither technical nor fundamental analysis can produce risk-adjusted excess returns, or alpha, consistently, and only inside information can result in outsized risk-adjusted returns. So once a market is efficient, it's really hard to beat the market. But he argues that that's great. That's all great and all. It might just be better to passively invest especially in an efficient market. But he says Bitcoin is not the market, and he says holding one asset out of the entire crypto market for a long time is highly risky and not a good strategy for a long-term investor who understands the diversification of portfolio and risk management. And he argues that if Bitcoin crashes, you're dead, right? Because all your eggs are in one basket. And so his kind of the beginning of his argument is kind of laying out the groundwork that there's good reason for why you might want to consider investing in things outside of Bitcoin, whether it's to diversify your portfolio or to make excess returns while the market is still not efficient. So then some of the other community members wrote up some arguments that explain how they think that you can actually beat BTC passive exposure. And Hugh Long Press here, he goes on to say, look, there's definitely ways to beat the BTC exposure. And he says, for example, if one can time the market well, let's see, I'll highlight the whole thing. He says, if one can time the market well, there are ways to beat BTC returns. Since BTC often experiences 80+% drawdowns in a bear market, if one can sell BTC close to or before a bear market begins and then re-enter once a bull market begins, they can achieve superior returns. So you basically exit right before a bear market, re-enter right before a bull market, and you're likely to make excess returns. Furthermore, he says, if you can find assets that will outperform BTC in a bull market, and he even gives two examples. He says ETH and XRP in 2017 bull run, then you can outperform BTC passive exposure. And just to highlight what he said there, I decided to pull up the chart of comparing BTC and XRP and ETH. And here's a chart that does that. If you look at a linear scale, it's not really helpful because BTC price is just like way different from ETH and XRP. But if you look at the log scale, it's actually kind of interesting. What you can actually see here is that in 2016 to 2017, in 2017, you can see that this is XRP, this is ETH, and this is BTC. Your returns on investing in Ripple and ETH would have beat just passive exposure to BTC just based on this curve line here. So he highlights those two strategies as being two ways to beat the returns. And then there's another argument which I found compelling where so then I'm going to go back to Mattress Decoder's argument where he says, traders have various strategies that they employ to beat returns. Traders are much more technical than probably a general investor. And so he even lays out some of these strategies. So they're called technical analysis, statistical arbitrage, high-frequency trading. These kind of strategies help you generate high returns in short terms in a short period of time. And so if you're looking to beat BTC returns, I recommend that you dig into these trading strategies and get more smart about it. And then there's another interesting argument that I really like by this guy named ICO Alert. Interesting. And he says that what he did was, his argument was that, no, I disagree with this claim. And he did it by giving examples. So it's an argumentation through like real world examples, and he gave examples of different strategies that worked well for him, and some of them he even like gave an investment grade for all these strategies. So for example, he says one is like the same thing as what others were saying: invest in multiple coins, Bitcoin, altcoin. That way you're diversifying your portfolio. Another strategy, he said, is to set a small percentage of your entire portfolio to invest in high potential ICOs and IEOs. They could have the potential to generate 3 to 10x for you. Obviously, this is high risk because there's been a lot of ICOs and IEOs that are known to be somewhat scammy or things that just don't pan out. So I do this carefully and make sure that you're investing in projects that you trust rather than trying to just invest on the next hype train. And then he says another strategy is to do leverage trading. For example, you can do 4-to-1 leverage, meaning that you place trades 4 times bigger than your starting amount of money you borrowed from a crypto exchange, and with the hope that you make more with that borrowed money. But the risk is that if you lose capital, if you don't make more, then you lose capital. This is also high risk unless you kind of know what you're doing. And then the last one I thought was interesting, where he was like, you can also just, if you don't want to be this technical investor who's always looking for new things to invest in, and it takes a lot of time and effort to actually do this kind of stuff, right? So he says the other way you can do this is to work as a bounty hunter or translator for a crypto company and get rewarded in crypto, because a lot of companies now are rewarding people who work for them in crypto. And so that's a way to diversify your portfolio and maybe beat BTC passive exposure. And so he grades this as very low risk as well. And so, kind of to summarize, it's clear that most people seem to challenge this claim that just buying and holding Bitcoin is the only way to be successful in crypto, except the huge caveat that a lot of these people laid out is that he says most people do not and probably should not pursue crypto trading to try to beat the market, because it's incredibly time consuming and very risky if you don't have the right strategy or mindset. And so basically you have to spend a lot of time and energy to be able to beat the market. And so unless you're willing to do that and get really technical, maybe it's better to just buy and hold Bitcoin rather than trying to beat the market. But I'm not an investment advisor, so I recommend you either do your own research, but I just wanted to share some of the arguments that came in